All right, guys. So in this video, I'll be breaking down the buys I had taken on Nasdaq. So what you're looking at is a recording of the trade I took this morning on Nasdaq. Let's go into the details here. First, what you notice is where we see NDOGL, which is new day opening gap low. You can also see new day opening gap high. So Friday's regular trading hours close up here. Then Monday open up here, regular trading hours. So you want to notate those areas. And we also had a clear liquidity pool that price ran out, which then ran into these two shaded lines, which is a 15-minute fair value gap. So I'm watching all of this, watching how price has ran out, taking out liquidity. One thing to call out is that S&P had not ran out is Friday's low. So that's why I was confident putting some buys here. And also the lower time frame actually gave me a reason to get in. So you're going to see. So what do we have here just to start with? One, we have a run on liquidity on previous day's lows, which we did not see S&P 500 do. So I always keep track of those two indices. All right. Whenever I'm looking at indices, I want to find a correlated market. So for Nasdaq, I'm looking at US 500, S&P 500, sometimes the Dow. And I like to see one do something that others not do. In this case, we had Nasdaq run on previous day's lows or Friday's lows, and S&P was reluctant to do so. So right at 9:30, price goes way lower. So at this point, what I'm thinking is we're way below one midnight opening price, which is another price we watch, and we're way below 9:30's opening price, and everything's in New York time, by the way. So we're way below that. Okay, so at this point, to me, I see that as we're in a discount. Then we go to 15-minute fair value gap. So a lot of things are working for us here. And if you look on a 10-second chart to your right, this is what really propelled me to take the trade. One thing you notice is this candle right here, which to me is serving as a breaker, which is the last up close candle for a move lower that made this low here jagged. So he has up close candle and boom, taking out liquidity, and then we reject. Now, what I'm also watching, watch how price is respecting down close candles in this 10-second chart. So again, we're on the 10-second chart, right? So the markets are controlled by algorithms. The way price moves is controlled by algorithms because there's no reason why I should be going down to the 10-second charts. If you look at my last video, I did the same thing with the 10-second chart. No reason I should be able to see certain things on a 10-second chart and attribute that to the reason why I took my trade. If price is not controlled. So price moves in a certain manner every single time. You just need to get familiar with seeing how price moves. So what do we have here again? This breaker, which is last up close candle for a jagged move. If you look how price is moving higher, I'm watching how price is supporting every down close candle. So we see down close candle here, price goes up, drops it, pushes higher. Down close candle here, price drops to that, pushes higher. So this is good. Then I'm looking at this fair value gap right here. The space between this candle's high, this candle's low. Look how price is wicking in there, and is rejected. Wicks in here and rejects. So that to me is showing signs of accumulation. This market wants to go higher, right? And we also have, at this point when it's into this breaker, we're yet to trade into this. Look at the 5-minute fair value gap breaker, right? So one thing I like to do when I'm trading, I don't like anything to be in the way. At least at my entry point. So my entry point is down here. We have at least a little bit of range. So down here, put us at what? Let's just call it. You can't really see the price here. Let's just call it 19,360, right? So we have a little, like at least 20, 30 points to at least get into this fair value gap. That's when my first area of concern might come into play. Whenever there's a higher time frame level. But in this case, I was expecting price to run higher and at least take out the liquidity pool above. Reason being is, again, the S&P 500 failed to take out its lows, and we've just been going down. So the average trader wants to chase this stuff down. So you can only imagine 9:30 opens, price goes lower, big candle goes lower. What are people thinking? They keep going lower. I'm thinking differently. You want to think differently from the crowd. I'm gonna go higher. But I don't just buy blindly. I want to see some type of accumulation happening on a lower time frame, which is what we have here when you look at the way the 10-second chart was operating. Good play. So at this point, again, I outlined the breaker. You can see it there. And I'll trade the 5-minute fair value gaps. You can see how resistance might come into play. See those resistance a little bit. I'm also marking this 10-second fair value gap here. It's all in real time. This is not market replay. So if price can overcome this fair value gap, I will feel confident adding more position. So you see me highlighting in gray the 5-minute fair value gap. We finally overcome this fair value. Why is that important? Because this fair value gap here initially dropped price lower. So I want to see price go above that and confirm it's no longer using this drop lower, and instead it might use it as an inverse and use it to actually push price higher. All right. So watch here. You're gonna see me add a position. So I stuck to my words, added 2 more contracts there. Run this fair value gap. Just clean price. At this point, what am I watching? What would I be worried about, right? I'm worried about, are we actually going to overcome this 5-minute fair value gap? This price can easily start dropping from here. So I am watching that, right? And I want to see price just move away from it. Again, typically you want to enter a trade when there's no resistance, less resistance in your way. There's no fair value gaps, no order blocks, nothing. You want to have enough range before you get into those levels, or before you get into level of resistance. In this case, we had about 30 points, and with the background, these highs are our targets, and potentially this is the last 5-minute fair value gap that dropped price. So I want to see the price around these highs and potentially get into this level here. That was my target. And if it goes wild, obviously all the way to the highs. We didn't get that today. And I spoiled it for you. See how price is moving. Notice again how down close candles are supporting price. 10-second chart. See price pushes higher, taking out the 930 highs. That's where a lot of people have their stop. They'll see price drop lower and they want to chase it. You see me taking off some positions, take off 3 contracts. The price, look at that aggressive push into there. Very sexy push. Took off another setup position right there. And then now I put my stop loss at a little bit above break even. So I hit my targets. Now I'm just holding 2 more contracts to see if it wants to keep going higher. You can see right here, let's pause it for a second. You can again see my initial entry, 5 contracts, added 2 more here. You can see me getting off my 3 contracts here after all these highs, and then 2 as I run into this fair value gap here. So we have 2 contracts left here. One thing to call out too, you're probably wondering what are these 15-minute, what are these orange levels here? So it's really a 15-minute fair value gap. You can go on your chart, draw this out, but it's an inversion fair value gap. This price traded below it. I want to see price let's use this to then drop lower. Okay, but that's going to come in the sell. So I also did some sales today, which is going to be the part 2 of this video. So keep your eye out on for that. So again, in my mind, we've already accomplished a good deal. You can see we hit the stop loss there. So again, if we're just doing quick little reversing here. So from here, let's call it 19,369 all the way to 19,448. That's about 90 points right there. So nice setup. Straightforward, straight to the point. Watching how 930 dropped lower, taking down the previous day's lows. S&P fails to do the same thing. We don't want to do what retail is doing. We want to do the opposite when it's applicable, and we go for the buys. So wonderful trade, wonderful setup. And then the sells to me were more crucial. It makes more sense. That's where the side of the market wants to be on. So we're going to get into the sales on the next video. Thanks for watching. Again, if you want to join my free Telegram channel, please feel free to join the link below. Click on the link below and join. I will be dropping the course down the line. I don't know when yet, but I will be getting into my trading methods, getting into specifics of things. I'll do that for free on YouTube. But follow, like, subscribe. It's encouraging, and let's get after it, right? This went into Q3 of the year, Q4 of the year, so it's time to kill it, right? Killer instincts are high right now. Thanks for watching this video, and feel free to watch the second one where I'll go into the details of the sales as well.